Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, October 30, 2012. Well, a change of trend to the downside today, and the candle has made a lower high and a lower low. Previous day's trading we had an inside day, prior to that an outside day, so a lot of indecisive trading in this congestion area. Today, establishment of a new first time frame downtrend. No significant move here though. We have another spinning top type candle, almost a doji type candle, and it does denote indecision, so not terribly confident of this trend continuing down. The market has tested down to the lower boundary of this small flag pattern that I drew for the previous over the past few days, and there is potential for the market to break out to the downside, but we do still have that strong support at around number 1700 below where the market's trading at the moment. In terms of the Fibonacci extension, now that the market is trending down, we're examining the current first time frame downtrend and its relationship to the previous time the market was trending down, and here we've seen price rejection from the 23.6% level and significant rejection. If this market does continue trending down, we do have potential support at 38.2% at around the 1698, which coincides with the round number 1700 potentially strong support. In terms of the Fibonacci retracement of the prior uptrend, only a two candle uptrend, and here we've seen rejection from the 61.8% level here. Does suggest that there is a possibility of the market changing trend back to the upside. In terms of the trend line that's been drawn previously and the trend channel here, there is a possibility that market could interact with the trend line over the next day or so, and there's a likelihood that that area will hold as potential resistance to the market. The top of the trend line coincides with the high here from a few days ago around the 1720 area, so that will be significant resistance based on that as well. We also have the market trading within this highlighted yellow zone, and we will have potentially strong resistance within that zone as well, and we're trading within the cloud, so potentially strong resistance there. So a likelihood that if the market does rally, that we will see it bounce off to the downside down below that trend line. But if we do see the market break that trend line in a bullish manner, it will say something about the loss of momentum in this downtrend that the market's been in for quite some time, and it will suggest that there is potential for a change of trend in a higher time frame. Not evidence of it yet, but the break of that trend line doesn't mean that we have a break of trend. It actually means that the trend that that line was describing has lost momentum. In terms of Ichimoku, obviously a neutral market in big picture terms, so we're trading within the cloud, but the market remains bearish in the long term and medium term time frames by trading, the medium term and short term time frames by trading below the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. The Kijun-sen is still pointing flat. Price action has attempted to rally it back up towards there, but the strong overhead resistance has limited that. Strong resistance within the cloud, and previously we saw the high here around 1720 be strongly rejected from the top of the cloud, and obviously this zone here of resistance highlighted in this yellow is exerting its influence once again, and make it very difficult for the market to rally. Because this market has had a lot of difficulty rally, it does say something about the lack of strength of the buyers in this market, and that does suggest that there is potential for a close down below this small flag pattern and lower levels. But we do have this strong close by 1700 round number support, and the market will need to close down below there. I suggest that if we do see a solid bearish close below that level and the sellers take control of this market strongly, then the market will quite quickly move to lower levels and has potential to trade down to around the 1675 level. But that's not happening at the moment. There isn't really any sign of that happening. We do have that strong support there that the market will need to trade through if we are going to trade to lower levels, but we also have strong resistance overhead. So once again, a market that's really it's congesting here. It's bound by a strong upper level and a strong lower level.